Hi, everyone. This is Rob Roy of Elliott Options, and welcome to TradeFinder Live. As you can see in the background, I got some friends joining us for TradeFinder this evening, so we'll see how that goes. Hopefully they don't jump across the keyboard or make too much noise with the bells. If you're new and this is your first TradeFinder, welcome. And the reason that you may be here is to go along and see what we do as far as identifying case study considerations, our educational process. And if you're watching live on YouTube, welcome as well. Please don't forget to go and take a look at our last YouTube recording. We have a celebration. We did hit the 25,000 mark as far as YouTube subscribers. You still have one last day to go and list who you think one of my top 3 PGA Tour players is, and we will do a drawing for 5 quarterly of our alert subscriptions that we'll be giving away. And as soon as those people are notified, we'll do another SPY recording and then announce the winners then. So we will make sure everybody is aware of it ahead of time. So you need to do that tonight if you haven't already. Also, another piece of house cleaning, if you will. It's still not too late to sign up for our indicator mastery class. There'll be a link in the comments section that you can click on and join that. It starts tomorrow night, and we look forward to having you there. If you're not familiar with what indicator mastery is, basically I have a technical trading system that includes a number of different technical indicators, and I run a search based on those indicators. So a result has to qualify through all of those indicators. And then once that list is compiled, which usually runs 5 to 10 or so, I apply Elliott wave from there, and then that creates the system that we utilize to send out alerts to our subscribers. So it gives you an idea, an in-depth deep dive, if you will, into the technical indicators that we use. And we're going to be doing that every Wednesday throughout the month of September. So love to have you. Again, click on that link and register. All right, so with that out of the way, before we move forward, if you've seen any of our videos, you know that we have to do this disclosure/disclaimer. It is important. So if you haven't seen it before, please take a screenshot of it, read it in detail at your leisure. And a couple things that the powers that be want us to make you aware of is, number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers, we have a lot of international subscribers as well, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. So again, the rest of it's just as important. Take a screenshot of it, read it in detail when you can. All right, so moving forward, what is TradeFinder? We will talk about the markets, and they're creeping higher, kind of on the back of what Chairman Powell said at the Jackson Hole Summit. They actually canceled the actual event and did it virtually, but he did make his speech nonetheless. We'll talk a little bit about that. Then we'll review our past Elliott wave alerts that we may have sent out to subscribers, so we'll give you an idea there. And then we'll go through and look at our case study considerations that may be considered open positions from past trade finders, and then we'll look for one tonight. And then with whatever time's left at the end, we'll open it up to a general Q&A that usually amounts to you guys giving us your favorite stock symbol, and we take a look at what our indicators, again, that we'll be utilizing in indicator mastery may say about your favorite stock. So that's it. That's how TradeFinder works. So without further ado, let's take a look at the current situation with the market. And if we take a look at the SPY, you'll be able to see that we did creep a little higher yesterday, a little bit of a back off today, but the key is we look at that 10-day moving average, and you can see that based on what happened on Friday and then yesterday, we got just a little separation from that 10-day moving average, created a tiny bit of an overbought condition. We put the Elliott wave on there and see that we're now at 197% extension on the wave 5. It's just amazing how it continues to move to the upside. Believe it or not, there's actually another qualified zigzag here. And so perhaps that gives us yet another target, and it's right at the 38.2% fib corrective level, which would give us a 61.8% extension, which guess what is exactly where the market has taking a little bit of a pause today. So we got right there on Friday, tried to break a little bit above it and sitting on top of it as we wait to see if we will make this an extended zigzag as well. Notice the price, 460 is the 100% extension on this zigzag, the exact same price that the Elliott Wave long count has given us, and that's in some of the past SPY updates on YouTube as well. For those of you that are streaming live on YouTube, you can go back and look at those. You'll see the target. And in addition to that, 460 is also the target on the weekly chart with a zigzag. So now we have three different Elliott Wave Fibonacci levels giving us 460. So it seems pretty likely that we're going to go to 460. There is a lesser target at 452, but we pretty much have covered that already with a high at 453 yesterday. So that one's done. We've already hit that target. So now we look to the 460 level target, and that's seems to be well within reach. Now, when we have hit a target, and so we had kind of around that 452, we're at the 61.8% extension. We like to take a look at our indicators to see what they're showing. And when we look at the DMI, the ADX is curling up. There is separation between the two directional indicators with the positive on top, but that ADX is too low to be giving us a signal that this is a strong trend. Now, could it continue to 460 without support from the DMI? Sure, it could. It's just telling you it's not a strong trend. And what we've been doing in Elliott Wave Options is trading the trend. Trend is your friend. That expression's been around a long time. So we've had a lot of bullish positions, but very selective and not staying in them very long. So if we hit a nice return in a short period of time, we've been taking those, perhaps exiting a little bit earlier than we might have otherwise, but that's because it's prudent to do that at this point in time. As the further we extend in this upward move, I think the more prudent it is to be cautious. You don't want to abandon what the market is telling you, but you also want to have in the back of your mind that all of this could reverse and reverse significantly in a short period of time. And my personal view is the further we go up, the more significant the correction is likely to be. Had we corrected a while back, I don't think the correction would have been nearly as large as what it probably will be when it occurs. I've been saying the market needs a 10 to 20% correction, and people are like, 10 to 20%, that's a wide range. Well, maybe we can adjust that. In the past, might have been looking for more 10%, and as the further up we go, maybe a realistic correction would be more in the 20% range. So we'll just continue to trade the markets as the patterns show us, as our technical indicators guide us, and when the correction comes, it comes. But for now, we're still moving to the upside. So I thought we'd take a quick look at volume as well here. As you can see that on Friday, that move to the upside was pretty decent volume. So what was the other thing that occurred today? Last trading day of the month, right? So last trading day of the month, kind of a little pairing going on, I think, for people to try to collect their bonuses, etc. More of them are done on a quarterly basis than they are monthly. So September's and tends to, pardon me, carry more weight than the end of August would, but still it's significant on the last trading day of the month. And then the first trading day of the month usually matters as well. And the first trading day of the month is when institutions put new money to work. Like everyone that's putting money away every month through a dollar cost averaging program, an IRA, 401k, whatever retirement plan that they're utilizing, a lot of that money has to go to work. By prospectus, by rule, by law, the investment managers can only keep so much of that in cash. It has to go in somewhere. And the first trading day of the month is usually when the new money is put to work. So at least in the early part of the day, you normally have an upward bias. Not a guarantee, nothing's 100%, but that's what usually happens. Futures aren't showing much right now, but who knows? We'll see what happens between now and the market open. Now, that doesn't mean that it has to be an up day all the way through. It's just usually in the early part of the day when that money comes in, and then you see how the afternoon plays out. But And tomorrow is going to be interesting to see if that normal pattern plays out. But anyway, decent volume, a little bit better volume, and sitting here resting right at this new zigzag. I thought you'd be excited about yet another zigzag. That's 5 zigzags now in the wave 5. So we've got a wave 5 pattern, and in the 5th wave alone, there's been 5 zigzag patterns. I don't know that I ever remember that. Talk about how it's very rare for a pattern, a zigzag, to extend 261.8%, and that's pretty rare. But having 5 zigzags within one particular wave 5, I'm not sure I can remember ever seeing that. So, we're creating history, I guess, if you will. So that's about it for the current market. We'll take a look at some other things. I know everybody wants to look at the Qs. We'll go ahead and look at that now. It is in our list. So we'll go ahead and briefly talk about it now and then cover it again as we go through our updates. And you can see right through here, there was the resistance area for the triangle pattern that we looked at, and clearly an upward bias. Now, we talked about how the Qs were taking a break. Were they going to be the new market leader? And they're in a wave 3, breaking out of an ascending triangle pattern. You take a look at the DMI, pretty similar to the SPY. So the two markets are kind of starting to move in conjunction here. Still, the ADX is not giving a signal yet, but it's curling to the upside, separation between the two directional indicators. But the ADX has to break above that negative directional indicator and break above 20 before it tells you that this move is strong and likely to continue. So until we get that signal, you treat everything suspect. Yes, it's an upward breakout. It's a nice move to the upside. Could it reverse? At this point, it could reverse at any time. However, if the DMI does give us the confirmation, then it means that that move is strong, likely to continue. So we'll see how that plays out. Again, more of a briefing of what we're going to talk about tomorrow in our first session on indicator mastery. So if you're just joining us, if you're just joining us on YouTube in a live stream, just a reminder, starting our new educational course called Indicator Mastery tomorrow night. There is a link in the comments section where you can go through and join. You can go to our website as well, EWOtrader.com, and sign up, register for it. Love to have you. Again, starts tomorrow night. All right, so that's the Qs. And then I also wanted to show you the IWM. It's looking really hard at a strangle for our subscribers today, and just couldn't make the pricing work to where it was comfortable. And we've talked an awful lot about that. We're going to be talking about that to our subscribers Thursday night as well. We do a meeting for just subscribers only on Thursday night for our alert subscribers. And so we're going to talk about some ways that we can offset some of the oddities that have been occurring pricing wise with options with implied volatility. But you can see there's that 225 line. We've been talking about 210 and 230 forever, but now we're creating a bit of a pattern here right in the middle, and you could easily draw this line right down to 225, and you can see where there's been support resistance moving through there. And then we have the set of higher lows right there at 225 with that horizontal line. So at this point in time, it looks like the IWM wants to break out. Now, what's the problem? Well, the issue in trying to work out the pricing and the Greeks, et cetera, was obviously if we have resistance at 230, it's not too far on an upward breakout. So if it were to break to the upside, boom, it's going to run into resistance pretty quickly. Not an ideal scenario for a strangle. If it dropped to the downside, a little more room down to that 210 level, but still the things just didn't work out. But there we are with the IWM still trying to figure out if it wants to make some sort of a significant move one way or the other. Looking at Bitcoin, been doing a pretty good consolidation job here lately, right around this fib level. And we've talked about that as well. And you're probably tired, I'm sure, of seeing the zigzag that we showed on the way down, but man, it was just so spot on. And then if you're newer, if you haven't watched this before, we had this descending triangle. We talked about how there's a misconception that a descending triangle promotes a downward breakout. No, it just means you're going to have a breakout. It could be upwards or downwards. And in this case, it was to the upside, as you can clearly see. And then we also had this zigzag pattern here, which gave us that level pretty much coinciding with the Elliott wave pattern there at 61.8, or the Fibonacci level on the way down. So that was the extension on the downward zigzag, and this is the extension on the upward zigzag. So the two fib levels kind of coming in connection there. 61.8 on the way down, 100% on the way up. And look what's happened. Bitcoin went up, boom, nailed that level, and it's just been sitting there. Now, this is an end-of-day chart. I know Bitcoin trades 24 hours. I understand all that. But at some point, if you're looking at an end-of-day chart, you have to have an endpoint for the day, just like you do with the futures. But look at that. Look at these bars. So again, this is Elliott wave Fibonacci stuff at its core, just absolutely nailing Bitcoin. It's been so all over Bitcoin for the past little year or so. You can go back and look at some of our past SPY recordings and look at the Bitcoin forecast as well, not just here, but on the way up, going up to that 64,000. We talked about that. So we're going through some consolidation here. And honestly, that's really good consolidation. When you take a look at this here, you can see that we ran up into this area and then moved above it and have consolidated on top of it. So this entire consolidation pattern through here is pretty positive, especially when you're right underneath that 100% extension. So it's kind of leaning towards, you would think that we're going to move back to the upside. And if we do go up and hit this 161.8% extension, it just seems crazy to me that we're not going to go test the old highs. I think that's very likely. So we have, 56, 59, and then all the way back to 64. Anything could happen, anything could change. But if you're looking for a consolidation pattern that's going to yield to a continuation of the move, this is ideal. And it doesn't guarantee anything, but that's an ideal scenario. All right, so let's take a look. We do this as well, the XJO, for our international subscribers, especially those over in Australia. Pardon me. Going through some consolidation there as well. And we had the big breakout move from a pretty decent, what's that, month and a half long consolidation that the market went through, the XJO. And this is the way I drew it. To me, it looked like two triangles kissing, if you will. Triangle connecting to the downside, which you normally look at, and then consolidating on top of an expanding. So putting those two back to back, you don't see that very often, and had the nice breakout move. And then we've pulled back a little bit, and you see the wave 5 went right to 106%. So it's a logical point to find some resistance, a little bit of a move back to the downside, and then we're going through consolidation even with that down day. It hasn't broken consolidation, so that still looks pretty good. If you're looking for a negative, it did break the 10-day moving average. It looks like, I talk about this where I'm not a big fan of using a 30-day moving average as a support resistance line when we get into moving averages in the indicator mastery. I'll explain a little bit more about this. I use the 30 for the 10-30 cross, whether it's crossing to the upside or the downside, and that's why it's on the screen. Just so happens here, it looks like the XJO kind of likes the 30-day moving average. You can see it found support there, and it also found support back here with these two triangles. So the XJO is a little bit unusual from that standpoint, where the 30-day moving average seems to matter. So perhaps if you're trading in the Aussie market, you want to pay a little bit more attention to it than I talk about as far as a support resistance level. Taking a look at volume here to see where that might go. You can see on the downward day so far, not much volume, but we'll see how that ends up trading out. But pretty good volume yesterday. So the market is going on rising volume, which is kind of a bit of a discrepancy there when you have the market going dead sideways and then you have rising volume. You don't see that very often. That's an interesting kind of divergence. So which way is the market going to break? It's likely going to break one direction or the other with that kind of divergence, but it's hard to tell which way it's going to be. But it seems like in a pattern like that, a sideways consolidation with increasing volume, something's getting ready to happen. It's not really a triangle pattern here. You could do a little bit of a reverse, kind of a reverse ascending triangle, something along those lines there, but that's just a stretch trying to create something. It's really a sideways consolidation, and it looks like the XGO wants to break out. Often people have asked about the Nifty as well, so we've added that in, which is India. A lot of chatter has been going on in the financial markets about the Indian market, and you can clearly see why with this big break to the upside. So it makes sense to take a look at it. It's in a pretty strong wave 3. You look at the DMI, now look at that. Talk about getting ready to set up. So close is the ADX. It's right there at 20. It's right there about to break above the negative directional indicator. And look at the separation between the two directional indicators. And we'll talk about that as well in the indicator mastery. The more vertical the separation, the stronger that signal is when one takes control over the others, the buyers versus the sellers, etc. So taking a look at that, you can see that man, it looks like we may be just getting started on a move to the upside there. I think it needs one more day. It's right there. And people say, oh, it's going to break it tomorrow. And we talk about this to our subscribers all the time. It has to actually break it. Let it actually break that level to give you the signal. Don't assume that it's going to, because sometimes it goes right up to it and rolls over. But usually if you get the actual signal, all the rules are followed, then it means that that trend is a strong one and likely to continue. Now, if you had a negative there, you'd say we might be just a tiny bit overbought here. There is a little bit of separation here from the 10-day moving average, not really severe, but enough to maybe warrant another sideways day. You can see that we opened on the high and closed on the low, and that's just because on that high it was too far from the 10-day moving average. It was overextended. It needed to rest a little bit, and it did. But man, that DMI is looking like it's setting up to continue to move to the upside. So those of you internationally wise that are trading the Nifty, it looks like you've got some more upside to move there. So giving you a little bit of a branch of the markets, I thought we should look at interest rates because we had talked about that triangle that was occurring in both the 10-year, pardon me, and the 30-year. And you can see that, well, we broke out, but as we talk about in our rules, no confirmation. When you have a breakout of a triangle, you have to have a confirmation day. So we broke out on the 25th, no follow through day, no confirmation day on the 26th. And what happened? We retraced it right back to the point of the triangle. So that is not a qualified breakout. You just sit back and start over again. Maybe the pattern morphs into something a little bit different. Maybe it goes into a larger triangle. I mean, that's a possibility as well. But at this point in time, you have a failed breakout to the upside on rates. And then we go back to Powell's speech, and I thought he was kind of sly on it. And I'm not a fan of the Federal Reserve. Anybody that's heard me speak over the last 20 years knows that. But I have to admit that he managed it pretty well. Pardon me. And what I'm talking about is at the last meeting, he came out in his speech after the meeting saying that they weren't even considering raising rates. That wasn't even on the radar screen. But then the minutes were released a week later, and it shows that a lot of the voting members of the FOMC were in favor of starting to taper off this year. And then they're pointing out, well, tapering and raising rates is not the same thing. Well, it functions the same way, because if you don't have the Federal Reserve, this massive buyer of our bonds and treasuries in the markets, technically buying them, I mean, they it's a balance sheet entry really. Is they're not technically doing it. They enter in on their balance sheet, and then they inform the Treasury how much money they can print. That's how it really works. But if somebody isn't going to come in and take up the slack from what the Federal Reserve is doing, well, what's going to happen? Demand's going to drop, prices are going to come down, yields and rates are going to go up. So it still works the same way, whether tapering is not the same as raising rates, the function is going to be the same. It's likely to create an increase in rates, again, unless somebody from around the world comes in and picks up that slack. I don't know who that would be. So I feel like we're going to start to see rates go to the upside. Now, maybe there's one more run. So if we put the Elliott wave pattern on, you can see that this is a wave 4, and we tested the wave 4 basically on that breakout, and it failed and came back down. So that does set the stage for a potential wave 5 move to the downside, but I think that would be it as far as the bottom on rates, if that even happens. It's just like potential exists here with that test of the previous wave 4. Maybe it tested that level. It's at a good strong fib level, 38.2% level. So we could continue down lower, and then that will affect obviously the XLF. So we had kind of looked at, well, are the pardon me, are the financials going to be the leaders? And it looked like they were. You can see that breakout move, and then with that false breakout to rates, the XLF said, oh, well, wait a minute. If rates are going to come back down, then we're not looking so strong anymore. And that kind of put some cold water there on this breakout move to the upside that it looked like was going to continue. So we did technically make a new high in that wave 5 move and relabeled, but it didn't continue. So from that standpoint, not sure that we're going to see that wave 5 continue. It's going to depend on the rates. If we do go back down to that new wave 5 low on the TNX, then that's probably the end for the XLF, but that favors the Qs, right? So then maybe the Qs do regain their leadership. It looks like they're trying. Right after we were saying, hey, they're taking a break. Well, there's like that one, a very long break, and then they're back at it again. So we'll see how that all trades out and plays out over time. So that covers the markets, everything that I really wanted to show you there. So let's go back and take a look at some of our previous case study considerations, is what we call them, with TradeFinder. Going back to 511, where we looked at Poly that used to be PLT, but now it's changed to POLY. And we had this is the oldest one here. We had this really nice symmetrical triangle, which did yield a breakout. And then we'll take a look at that. You can see the breakout occurred. We retraced the breakout. We've been adjusting this position for our subscribers. And then we had this failed breakout move to the upside yesterday, and then retraced back a little bit today. So now it's back down at support, this whole area of support here. So we'll see if it tries again to make another run. Didn't have the momentum enough to do it yesterday, although it did have good volume. But look what happened today on the retracement, right back down to support. Had more volume than we had yesterday. So got to keep an eye on that support level and see how that plays out. And then we look at FND, pretty interesting movement here. So this was August 3rd was the date that we looked at this as an upward case study consideration. Then we created the wave 4 because back on the entry, you can see it was in a wave 3. And that's the challenge in a wave 3, right, is when does the wave 4 start? So we completed this zigzag pattern right here. So you can see in July, came back, made the wave 4. Now we're right back up to the top of where that wave 3 is again. So we'll see if that move continues. Probably warrants taking a look and see if we're getting a reset of the DMI. And it does look like it's trying to. I like the fact that the ADX came back below 20. Separation between the two directional indicators curling back to the upside. We'll see if that continues, but that one looks really good. And then CDW was on the 10th of August. You can see, so jumping forward to the August 10th, and that was trading at 191. And you can see that we have continued a nice move to the upside. So at 200, getting awfully close to a point to take that one off, take the gains and go. I would have been a little bit more apt to, again, let things run if we weren't so extended in all these markets. So our modus operandi, if you will, has been to take the gains when they're there, maybe just a touch earlier than we would have if we were earlier in an upward move. But when you're getting to the point where the uptrend is maturing, you just be a little careful. We're still trading to the upside, still putting on bullish positions, but maybe not as patient to let them run as normally would be. So that one's pretty close to taking that one off. That's been a really good run. And then the next one was the Qs. We've already covered that, so I'll just show you there's where we were and here, so we don't need to cover that one anymore. We've had a nice upward breakout there. And then last week we looked at Align Technology, which we did send out as an alert to our subscribers as well. And you can see what's happened here, a small triangle. Look at that. And this is right in with what Elliott talks about a lot. Don't forget the small triangles. We get caught up. We have our volatility portfolio where we look at larger triangles. And so he says, don't forget the little ones. They break out too. And that's about as well formed. It's small, but that's about as well formed as you could find a symmetrical triangle. It looks great. So a line's getting ready to break out. Well, let's hope that breakout is to the upside. Now, Elliott would say, well, it's in a wave 3. The likelihood is it breaks to the upside. We view things at Elliott Wave Options with Elliott Wave from a trader's approach. So we're not just so intent on getting the exact mathematical labeling of the charts exactly perfect. We're looking at things from more of a trader's approach of how you apply Elliott Wave to creating trades and trading in the real markets, in the real world, as we call it. And for me, with what I've experienced with triangles and creating the unique strangles that we've traded for so long, to me, if you have a triangle, you just go with it can break in either direction and don't focus on it going one way or the other. Yeah, you're going to lose a little bit of profit by creating a strangle, but you still got each side covered. And if you have one of those that, according to Elliott, if this broke to the downside, would defy the rules a little bit, well, you got it covered. So you don't have to worry about that, whether or not it's following with the greater percentages or not. If it breaks out, it breaks out, and it doesn't matter to us which direction things go. And I've been talking to our subscribers about this for a while. We just haven't seen a down market in so long. Once we do, and we get more things that break to the downside, more things that move to the downside, you're going to see a whole different world regarding the markets and how fast things can go and what volatility really does. Right now, volatility is just kind of playing around with the options pricing. But when you see the incredible moves that can happen when the volatility is increased from the fact that you're in a downside market, it's a lot of fun. It's exciting times to trade when those things occur. All right, so let's see if we can find a case study consideration for tonight. You can look, we had 3 really nice trades that we closed. We have our 2-minute trade reviews on YouTube. So those of you that are streaming live on YouTube, you can check those out. It gives you just a quick rundown and try to pick the ones that we show that give some sort of a little difference, some sort of a uniqueness to them. They're not necessarily always the exact same thing. And so here, this one, was on this indicator, and this one was on this, and we try to make it a little educational event as well as just looking at a trade. It's a lot more than that. So take a look at those. All right, so we come over here, and by the way, the software program, if you haven't seen this before, is called Profit Source. It's created by an organization called the Hub Organization, and a lot of people ask me about it, doing videos, YouTube, etc. People always say, what program is that? Because the charts are clean, you can program it with your own set of indicators. You don't have to follow along with mine. But with our subscribers at Elliott Wave Options, the organization noticed that, hey, a lot of these Elliott Wave Options people are starting to use our software. So they, as a bonus, created these things here where these are searches for those that are Elliott Wave Options subscribers for our alert service, as well as owners of Profit Source. And so these ones that say EWO here, those are mine. So those are my program searches. So when we go through indicator mastery, for those of you that may be new streaming, just joining us on YouTube, we have an indicator mastery class that starts tomorrow. You can look at the link in the comments section, or go to our website at ewotrader.com. And we're going to go through and talk about all these indicators that are in these scans, so to give you a better idea of what they're looking for. When we take a look here, the couple things that I normally look at, number one, and I talked about this before, when the consolidating stocks, which is how we find our triangles, got to 140, was saying, wow, that's a lot. Rarely seen that many. Well, look how many there are now. So I think this adds to the area of how we want to be prudent. We actually did send out a strangle for our alert subscribers today. As we're continuing to move to the upside, there's no doubt that's an uptrend, right? There's no doubt about it. We've even showed in our SPY updates, it's in a 1 standard deviation channel. So that's how tight of an uptrend it's been. There's no question about that. But the fact that it's just creeping up like that is allowing for a lot of consolidation patterns to occur. And the more that occur, the more underlying consolidation that's going on individual stocks that has to play into the market itself. We do have the strangle on the Qs, but it's likely that something is getting ready to happen in the market itself. So I think that was something that I wanted to share with you. And then we can also look at, on our bullish stocks, you can see that there are 5 that are still bullish on the impulse. And so these would be the ones that showed up with the whole conglomeration of the technical indicators that you'll be going through and learning in indicator mastery. And then those are the results. So you can take the thousands of optionable issues that exist in the market, and it whittles it down to 5. So this is basically my process of what I do each day, is I look at the results of these searches. And then once the searches show up, then we take a look and add Elliott wave to them and see where it goes from here. So here's CBRE. If you take a look at this, and this also went out as an alert to our subscribers. So this is 2 days in a row that this one has shown up on the list. Often they don't show up 2 days in a row. So it was on there yesterday and it's on there today as well. And perhaps you can kind of see what was really interesting here already. Well, you've got a CCI that's just breaking above 0. That's really good. You've got a oscillator that's slanting to the upside. That's a 535 oscillator. So that looks good. And then when we come here and look at the DMI, you can see that there was a nice move, really good DMI, came back down, curled back to the upside, resetting up again. The ADX is curling higher, good separation between the 2 directional indicators. That looks really good. So then at this point, we'll place the Elliott wave button on. So turn the Elliott wave on, you can see, well, we're in a wave 5 that's extended. We had a bit of a pullback, but what did the pullback do? Filled the gap. Gaps get filled, right? Was it 94% of the time? There was a study that was actually done. They heard me talking about the gaps get filled, and somebody actually went and did the study and looked at the data, and they came back with like 94% of the time gaps get filled. So that's pretty high. So it came back down, filled the gap. It's marching back to the upside, and here's what I was talking about. Hopefully you can clearly see this, that it's got a really nice zigzag pattern to it. Look at that, right at a 50% correction. So then the first level would be a new high there at 61.8, and then a follow through to the 100% extension would be expected up at 108. So we're already trading at 96. So to not get to 100 would be pretty surprising. It got really close to it on the wave 5 high, decided to come back and fill that gap. But you got a great zigzag pattern. You have a wave 5 that's likely going to continue and extend. You looked at the DMI. So all that looks really good. So I don't want to pick this one for our consideration tonight because we've already sent that out to our subscribers. So let's see what else that we can find. But I just thought while we were at it, I'd go ahead and share that with you. We've done PSA before. So let's take a look. Look, F&D's back on there again. And we're already in that one. So it looks like that one wants to continue. So there's 2 of them that we're already involved in. Remember when we looked at FND? I can bring it back up and show it to you right there. It's back on the list. So after it had this pullback in the wave 4, now it's completely reset up and it's back on the list again. So that's pretty interesting. But looking at public storage, this is one that we waited on before. We had an alert on this one before, and it took a while to move, but it was worth it once it finally did move. So let's see what we have set up here. And not quite as excited about the DMI on this one. It is following the rules. It's technically between the two directional indicators. It's moving up, but I want to see that positive directional indicator get a little bit higher there. You get nervous when the ADX gets outside the directional indicators. That's not how it's supposed to work. You can look at the Elliott wave pattern though, and it is in a wave 3. So that's something that's significant, strong to look at, the fact that it's actually in a wave 3. So it could continue to move to the upside and hit this wave 5 target all the way up at 360. So that to me is kind of in a bit of a watch list pattern. For me, I would want to see, here's what I'm talking about. So you see how we had a pretty strong day today, right? Then we want to see, was there volume? It was decent volume. So that looked pretty good. But we're right at that recent wave 3 high. And we need to break that, I think, in order to put on an alert or put on a trade on this. And when you look at the DMI, it's okay, but it's not great. However, if we do get a break above that wave 3 high, so we create a new wave 3 high, that would likely set the stage for a more supportive DMI than what we have now, which is borderline at best. It's technically a borderline DMI. So I would say put that one on the watch list. Let's give it another day or two and see what happens. And I joke about this, but I really do have a written watch list. I know people are fancy with computers and they have Excel spreadsheets, etc. I just use old yellow tablets, and I go through them because I write on them every day. And so when I look, I've got my watch list, and we take a look at it and see what's on there. And so we're going to put PSA. So in addition to my search results, I'll take a look at the watch list because I know there's something that's close to triggering there and see if it has. We did have a watch list last week on FIVE. So let's take a look at that just to give you an idea and see. I missed that when we were going through before. Let's see if that, well, see, that's why they go on a watch list, right? Well, that one, it didn't trigger, and that's a good reason. It wasn't ready to, so there you go. That's why you don't jump the gun. That's why you don't put trades on that don't fully qualify. If they're close, you gotta let this. That's a perfect lesson to what I was talking about before. Is the indicators have to trigger. They have to give the actual signal. Don't jump the gun. So we've looked at FND. Now there's a lot of banks. There was a lot of banks on yesterday's search as well. Several of them. And some of them fell off today, and that happens quite often. It's rare for them to be on there multiple days because I'm trying to find them when they actually trigger. And so if we take a look at the DMI here, let's go back to CCI, was looking awfully good, and take this oscillator off. I would say that if I had to pick one favorite, I mean, Elliott wave is my favorite indicator of all, but from a supporter standpoint, if I had to pick one, it would be the DMI. But you don't trade with one indicator. There's no reason to. You want to create a technical trading system. You want to find a set of indicators, which is what we've done, and that's what you'll find out in indicator mastery, that work well together. Some indicators have certain strengths, and they may have a certain weakness. Well, if you can find another indicator whose strength is the weakness of that one, perhaps they meld well together and they can start creating your technical trading system. And that's really what we have. So taking a look here, the DMI looks okay. It has crossed over because that was a big downward move. You can see we're in a wave 5 pattern to the downside. We're right at the 61.8% fib level. for wave 4. So based on this, it looks like this wants to continue lower. And boy, if interest rates move back down, that could change everything. So we were getting a lot of the banks and financials that were starting to look like they were setting up well with the potential upward breakout of interest rates. But since the breakout failed, now you can see that the charts aren't quite so solid anymore. So even though the DMI is trying to turn the tide here and go from a bearish setup to a bullish one, I would want to see it get above to go long on this, and it doesn't move a lot. These are all $1 increments over here, so I'm losing interest in this quite rapidly. You can see that there's the area of consolidation. If it broke above that, then it's breaking above that 61.8% wave 4 level, that fib level, which that would be a positive. So I would want to see this one break above 31 before ever even considering doing anything on this. It's too well set up to continue the move to the downside. You know, the DMI is showing a different story, but I don't look at the DMI as much on downward trades as I do on upward trades. So, you know, kind of when things are a little more bearish, you know, we will change things up just a little bit as far as the priority in our technical indicators. So right now the market's trending higher, so we focus on that. So that was a long-winded explanation for the fact that I think we're going to pass on that one. And realty REITs are not my favorites to trade either. They tend not to move as much. So we're already in FND. We sent out CBRE, so those were the better ones. So let's abandon that. Look at the momentum surge. So these are the lower dollar stocks. There's 12 of those. That would kind of lend you to think that maybe something's going to happen with the IWM, perhaps an upward breakout, finally break above that 230 range potentially. But let's see what we can find out. We can take this massive list of consolidating stocks here, 167. We can shrink that down by also clicking a bullish wave 3. So what that has done is bring us into a point where we have a list that are in a wave 3, but also consolidating. And look what we have there: real estate and financials, almost every one of them. There's the Russell, the Russell 1000. And I looked at that too today for our subscribers. I looked at both the IWD and the IWM. And the problem with the IWD is it just doesn't have any liquidity. There's no open interest. I mean, there's literally like no open interest, 0 contracts, which is a shame, because if you take a look at the pattern, you can see here. So here's another one that's been on for a couple days, and you can see that it's getting to an area where pretty good point of resistance right through there, and then a really nice set of higher lows. So it looks like the Russell 1000 wants to break. Definitely a different pattern than the IWM, except they're both consolidating, but the IWM is consolidating within a trading range. The IWD is trying to move into new clean air if it breaks to the upside. But again, you're trading with the market maker. That's it. There was nobody else there, and the spreads were too wide because of that. So it just wasn't a choice. But the pattern was great, and you can see how low the ADX is. So it looked good. We tried it. It just wasn't available. And so then Charles Schwab's real estate. So we got real estate and financials. It's pretty much it, except for Cintas. If we look at Capital One, breakdown yesterday, sideways day today, and it's not really much of a triangle pattern, but it's certainly consolidating right there at 165. So it tried to break above it in the middle of August, came back down and tested it, tried to do it again here towards the end of August, and made a lower high. That's not exactly what you want, is it? When you're testing a support level and trying to make another run, you don't want it to fall back down at a lower high, it's not exactly what you're looking for. This one to me looks like it just doesn't want to move enough because it's been consolidating since May. All that's not your favorite setup there. You don't want a stock that's just shown you that it can go nowhere for 4 months. So let's move on from there. But just looking at it was interesting. Yeah, that's pretty good consolidation there, isn't it? If you see a chart like that and you wonder, what is that? That's a buyout. Somebody bought them out, and so it pegged at the price where the buyout was. And so that's why it goes sideways like that until they delist it, until they take it off. They figure out, they do their merger acquisition, get all that done, and then figure out what symbol they're going to use, who's going to be the lead name or whatever. And then they'll delist the other company, and then that'll go away. But for now, it's just there, and you can't trade that because people have been like, well, you see that, let's just put on a sideways. It doesn't work that way. It would be great, wouldn't it, if it did? But you can't do that. So nothing to look at there. Let's see if there's anything on the bearish side. We might just have to look at the plain old long list and just pick one out. I'm trying to speed things up here so that we can get to some questions. Now we take a look at the bearish wave 3. Nothing to look at there. There rarely is anything because stocks move down so fast, they tend not to really consolidate on the way down. So let's just go through here, look at the big list and see if we can find a symbol that we like. One that tends to show up a lot. There's the Capital One. Caterpillar. Take a look at Caterpillar. See what that one looks like. ConocoPhillips, holy cow. With the hurricane stuff. Well, look at that. That's a pretty good looking chart. Caterpillar's not the biggest mover either, but look at that triangle though. Is it big enough? I'm not sure if it's big enough. You look at the mouth of the triangle to try to get an idea how far it would break. So from 205 to 225 is 20 points. You're looking for about a 10% move, and we really don't have that. Very close, but not quite there. And it's been consolidating since June. Well, it did have, maybe I need to take that back on my picking on it for not being a big mover. It moved pretty well at the beginning of the year. I don't know, I think we can do better. Let's see if we can find something else. Well, Dish is another one that we sent out to our subscribers. So that's on the list there. Camping World, Marcus Lemonis. That could be interesting. If you've ever watched the show The Prophet on CNBC, Marcus Lemonis is the guy that does that show. He's the CEO of Camping World. So this is his company. That's why he made his money to do the show The Prophet. It doesn't look too bad. I don't think we need a whole lot of movement out of this one because it's only a $40 stock. Is this a 4-point range? 36, yeah, 36 up to 44. Well, there we go. Let's see what the options look like here. Maybe we found our candidate here, and then we can post things up with a few questions. We'll see what CWH 831. Yeah, we don't want 5. We know that one didn't work out. All right, which exchange are you on? Camping World, there you are. Oh yeah, it's plenty of options. Yeah, no worries there. All right, so that's going to be our case study consideration for tonight, CWH. and that's a strangle for Camping World. And with that, I'll go ahead and take some questions. Zach, if you're there, if you could direct some questions to me from anybody that might be viewing and has a question, a symbol that they want to look at, etc.
Absolutely. So we'll start out with Jane. A couple questions here. So this might apply to everyone else listening as well. Jane asked, how do we enter the contest? I don't see it on the member website. So if you just give a refresher there real quick.
Sure. The contest is on the, and by the way, if you are a current alert subscriber and you happen to be one of the names that's picked, you will get credit for 3 months with your subscription. So you go to either of the last 2 SPY updates on our channel. So those of you that are streaming on YouTube, go there, our YouTube channel, Elliott Wave Options, you'll see us. And the past 2 SPY updates, last week was on Bitcoin, this one was on the Fed. All you have to do is in the comments section, list who you think might be one of my top 3. So you got 3 chances basically. Who you think might be one of my top 3 favorite current PGA Tour players. Those of you that may be wondering, well, where do you come up with that? My first career right out of college was as a golf pro. So that's where the golf tie comes in. And so basically for anyone who leaves a comment and lists one of my top 3, those names all go into a hat, and then we will draw 5 names. So we're giving away 5 of them. So that's how you enter. And yeah, you need to go there tonight and get that done so that we can draw the names, and then we'll notify everybody. And then the next SPY update, probably this weekend, we will have the winners announced once everybody's been notified. So go there tonight and do that. So thanks for the reminder there, Jane.
Absolutely. And Scott added that he loved the cats, that they added fun to the meeting. So I just wanted to pass it on.
I don't know what's going on with the cats tonight, but they're crazy. It's storming here, the remnants of the hurricane. So maybe they're just cooped up and pent up energy. I don't know what's happening, but I'm glad you find it humorous and not irritating.
So a couple more questions from Jane. 2 symbols actually, ACN and SPCE. She just also noted that ACN has earnings on September 23rd.
So talking about an earnings like 3 weeks away is when you're entering a trade, that's a good time to do it, because if you get too close to the earnings, they've juiced the premiums, and that makes it more expensive. And that is one heck of a nice breakout run from the end of June, isn't it? So it broke out. I call this a stair step. When stocks do this, it made a run and then went through another sideways consolidation. Could actually go back and draw the previous step back here, because it consolidated there too. So see how it consolidated, broke out, consolidated, and broke out again. It's a different kind of pattern than our triangles that we like to trade, but nonetheless, it consolidates and breaks out. And if we take a look at the DMI and see if it's showing support, man, that is a frozen rope. You don't see an ADX go that sideways very often. Thing that I'll be a little nervous about is the fact that it's still outside the positive directional indicator. But note, and this is where it gets tricky, right? Note that on this last part of the move, it's been above the positive directional indicator the whole time. So that rule doesn't preclude the stock from going to the upside, but it does tell you this part of the move is nowhere near as strong as that part of the move was. So you can see the difference between the 2 DMIs. So the move in July was much stronger than the move in August was, and that makes you have to be a little cautious as well. So if I was long this, I wouldn't get out. I would just maybe tighten up, potential stops. If you were looking at it that way, watch and make sure that it doesn't begin to pull back. If it started to pull back, maybe take it off for now. And, when the earnings comes out, who knows what happens. But this DMI will likely adjust a little bit between now and the earnings report. It's got, 3 weeks we talked about before the earnings come out. but it's sure a nice pattern. I don't know that I would enter it right now, though, not with that set up on the DMI. If I was in it, I would stay in it. And if I wasn't, then I would just have to wait until I'm not afraid to enter before the earnings report. I just would need a better DMI to do that. And what was the other one? I'm sorry, I didn't remember the other symbol.
SPCE.
Oh, Virgin Galactic. Richard Branson sold a ton of his stock, and you can see what that did to it. You know, they had their really successful flight, you know, putting people into space, and then he sold a ton of stock. Now, it's always difficult when an insider does that, right? You don't know. The first thought is that, well, he clearly knows something that we don't, right? Because he's an insider with the company. And so a lot of people look at insider trading as signals. But the issue is sometimes those guys just have financial planning goals set up, and they've predetermined at certain points in their life or whatever that they're going to sell some of their stock. And that's just done for their estate, you know, retirement / estate planning programs. And it has nothing to do with where they view the company might be going. But it definitely gets people's attention when that happens. And it certainly reversed this stock at that point in time. So if we take a look at the ADX, you can see, man, that ADX is really tanking to the downside there. And almost, this, you're going to get a kick out of this one. Maybe why I was asked. I have something called the launchpad effect that I look at a lot. And it didn't do it here. It looked like it was going to back there at 30. But when you get a real sideways consolidation like this, I live on the Space Coast in Florida, hence the launchpad effect. Quite often you get these blast off moves. Well, it did it in June, kind of tried to do it in August and didn't, and now we've reset. Maybe it's going to do it again. I think Richard Branson is done with the program selling that he was doing, so should take some of the selling pressure off of there. If the ADX got a little bit lower, even though it's not a triangle, with that kind of a consolidation, you could certainly consider doing some sort of a strangle type trade, or just wait and see if it breaks to the upside. The issue here, though, is even if it does break to the upside, it's going to run right into this resistance that it already had at 30. So it's got to break that too. So where did it close today? 27.11. So it's likely going to go test that based on what happened today. Let's see if there was volume behind that move. And yeah, there was pretty decent volume, so slightly above average volume there. So it broke above that, and get there when we've got to break above 30 from there. So that's a tough one. You just got to be on your toes if you're going to go long that. Do a couple more, and then we'll wrap things up.
Yeah, I was going to say, I noticed it was 5 after, so as many as you'd like, I'll pass through.
Yeah, we'll do a couple more. It took us a little longer to find our case study consideration for tonight, so apologize for that. We love the questions, but we're already past our window. So let's run through a couple more real quick, and then we'll call it a night.
All righty. Well, Pankaj would like to look at MP and Visa.
MP, M as in Mary, Paul?
Yeah. Mary Paul.
Okay. Taking a look there, you can see that pretty nice consolidation there, right? The 10-day moving average. This is one, thanks for asking about this one, Pankaj, because this is good educational stuff. So here is the Elliott wave that did what it's supposed to do. Look at this, 61.8% on the wave 4 correction. Perfect. Went to the wave 5 extension. Didn't extend more than 100%. What's it supposed to do? Go back to the previous 4. What did it do? Went back to the previous 4. So it's done everything it's supposed to do. That entire pattern on the way up and on the corrective move has done what it's supposed to do. So now what do? Well, you can do one of two things. You can trade this little triangle right here and put a strangle on it, or you wait for the breakout, because look, you can draw that line all the way back there where the resistance. So you got a little bit of an ascending triangle there. It's not huge, but it's only a $30-something stock. It doesn't have to be. So the two things you could do here, put a strangle on it now, or wait, let it break out, and then trade the direction. Because right now it's in that in-between phase of Elliott wave where everything that's supposed to happen has happened. Now you have to wait on the new impulse move. So the stock is, I mean, this is so classic Elliott wave with the 5-wave pattern, the corrective move, and then consolidation. That's Elliott wave right there. It's got everything wrapped up in a nutshell. So those are your trading considerations there. And so Visa was the other one. We looked at that one before. See what Visa looks like. And we talked about this as far as, well, with the whole Delta thing, people probably aren't going out as much shopping as they might have before. But then if people are staying home, before, the credit cards all did good because everybody was shopping on Amazon and online shopping before when they were cooped up. So we're not technically cooped up, but breaking that 230 level today makes me a little nervous. So if you were long this, you're at a 38.2% fib corrective level. That's a good strong level to bounce from. 230 though is key, and I think that's what we talked about last time. It's got to hold 230. Well, breaking it today doesn't mean anything, right? Because Pankaj knows this. He's listened to enough of them. You got to have a follow through or confirmation day. So just because we broke that today doesn't necessarily mean, hey, you don't want to bail on this one if you're long, but it does make you nervous that it broke 230 on above average volume. What does that mean for the economy? That wouldn't be a super strong signal for the economy, would it? So now we want to see what happens tomorrow. Do we get a follow through day? If you get a follow through day, then you're going down to 225 probably within a day or two, because that's the next level of support. And if that doesn't hold, then it's a whole different world. If that doesn't hold, then you're looking at 210, and that would be a pretty ugly move. So really important to see what happens tomorrow. If it gets back above 230, then no harm, no foul. You could just be in a head fake. They happen all the time at these fib levels, and then it's off to the races to the upside. But if it gets a follow through day to the downside, then there's your 225 needs to hold. If that doesn't, then yikes, watch out. So I think if I was long this one right now, if it was me, I would, if I was long, I would hold it. I would give it to 225. I wouldn't even bail if you got a follow through tomorrow. I would let it see if it wants to come down and test the 225 level. If it broke that, then get out because there's lower lows coming from that point. All right. So was there one more? I mean, that was two, but they're from the same person. So I don't think that counts. Let's do a different person, and then we'll go.
All right. Last one will be from George, and he's actually got two symbols in here. So we'll do MCD and MMM.
Mickey D's. Mickey D's and 3M, huh? Boy, that's some good old fashioned stocks there with all the stuff that we usually are hearing about in this day and age. That is a nice looking triangle pattern right there. Where's the ADX? Yeah. Is it big enough? 225 to 2. It's on the borderline of being a 10% breakout. That would be the only negative I could see, but that's a nice looking triangle. You can see that this is one of those that looks like an arrow, right? Had this long consolidation here. Looked like we were breaking to the upside, and then it couldn't hold it, and it came back down. And now we have a nice symmetrical triangle. It looks like McDonald's wants to do something. I wish the width of the mouth was just a little bit wider. It's just barely around the 10% rule, which means that you want the stock to move at least 10% of its price when it breaks out. It's really close there. It's the only thing that makes me nervous. So if you were going to do a strangle on something like that, you're probably not going to look for we usually look for 30 to 70% on those. You might take 20, 25%, be happy and go. Just because I don't know that the move is going to be big enough. And then 3M, man, I haven't looked at this one in forever, so I'm anxious to look at this. Another consolidation stock there right at 195. See what the LA wave pattern looks like. Yeah, when they consolidate like this, quite often they're not in a wave 5 pattern. This one has a decent descending triangle. Again, I think we're going to be borderline here. I've looked at 3M over the past, and it just doesn't move enough. You can see that move from March, like, well, that was a pretty good move, and it was. But 3M doesn't do that all the time. That's a pretty long consolidation following that move, though. So that's taking its time to do it, and the ADX is really low. So another one that's borderline on the 10% breakout move. So both of those, I would view those the same way. Both of the patterns look really good. Both have low ADXs. They both look like they want to do something, but I don't think I would wait for a better size profit in those. I think you get 20-25% on a breakout, take that and go. But they're both really good patterns, just right on the cusp of that 10% rule. Thanks, everybody. Look forward to try that again. Thanks, everybody. Look forward to seeing you again tomorrow night at Indicator Mastery. As always, we appreciate your time. Time is valuable for each and every one of us, and we appreciate you spending some of it with us. Thanks again for watching.